If your household makes over $150,000 a year and you still feel broke, this is why. You don't have an income problem, you have a structure problem. High income without strategy just creates bigger obligations. In this video, I'm going to show you 3 reasons why high income families feel financially stuck and how to fix it. And one of those reasons is hiding inside your mortgage, and most people don't realize it until they're already 10 years into making mortgage payments. Let's go. Let me paint a picture for you. We have 2 professionals, a combined income of $180,000 a year. They have a $1.2 million home. They have 2 finance vehicles, probably one's a Tesla. They have kids and activities, and they try and vacation once a year. On paper, they look very successful, but in reality, every single month feels tight and tighter because their fixed monthly burn rate is probably somewhere between $9,000 and $11,000 per month. Mortgage alone might be close to $6,000. 2 car payments could easily be another $1,200. Insurance, utilities, groceries, property taxes, subscriptions, sports, and suddenly the rest disappears fast. So even though they earn good money, their margin is very thin, and thin margins create stress. This is the part that most people don't talk about. High income families are often the most financially fragile regardless of their wage, and not because they don't earn enough, but because everything depends on that next paycheck arriving on time and in their account. And that brings us to reason number 1, fixed cost creep. As income rises, lifestyle rises automatically, not intentionally, automatically. The bank, they approve a bigger mortgage. The dealership approves a nicer vehicle. Credit limits suddenly increase, and slowly your income stops building wealth. It starts maintaining a lifestyle. There's a big difference between maintenance and momentum. Maintenance is when your income exists just to support your life. Momentum, it's when your income builds assets that grow over time. Most high-income households, they're stuck in maintenance mode. They're running hard, but financially, they're not moving forward. Now, let's pause for a quick reality check here. If I asked you right now how much equity you have in your home, most homeowners, they could give me a number. But if I asked you this question, how much of that equity improves your life every single month? Most people, they go silent because the answer, it's usually 0. That's the difference between having wealth on paper and actually using your wealth. And that brings us to reason number 2, trapped equity. Let's say that same family has 400 grand in home equity. It's very realistic in today's marketplace. That sounds impressive. Their net worth statement, it looks great, but that equity, it's frozen. It produces 0 monthly cash flow, 0 flexibility, 0 options. It just sits inside the 4 walls of that house. And when wealth is locked up like that, your paycheck becomes your only financial tool, which leads directly into reason number 3, the paycheck trap. When everything depends on active income, you don't feel wealthy, you feel obligated. You can't take 6 months off of work. You can't pivot careers. You can't reduce your hours because the financial machine requires feeding every single month. You have the mortgage, the cars, the daycare, the insurance, the groceries, the utilities. Everything depends on that next deposit hitting the account. And here's the uncomfortable truth that you might not want to hear. The people who look the richest often feel the most financially trapped because their lifestyle, it expanded faster than their strategy. High earners, they usually aren't broke, they're just poorly managed and structured. And structure is fixable. Now, when people feel this pressure, they usually think the solution is simple. I just gotta earn more money. I gotta ask for a raise. I have to start a side hustle. I have to work more hours. But more income, without restructuring, it usually changes nothing. If income doubles, but expenses double with it, you're still stuck in that exact same position. Nothing's changed. Let me show you a very simple example. Household A earns that $180K a year. Their monthly expenses are, let's call it 10 grand. Household B earns $300K a year, but their monthly expenses are 17 grand. which household feels wealthier? Usually neither, because both households have very thin margins. The real financial advantage, it's not the income, it's the margin. Margin creates breathing room. Margin is going to create choices. Margin is what will create freedom. Now, this is where the mortgage strategy, it becomes incredibly powerful, because if your mortgage usually is a single largest financial lever in your household, as well as the biggest expense. It's also the biggest asset and the biggest opportunity. But most people, they just treat the mortgage like a bill instead of a tool. They think the entire goal is getting the lowest rate, but the rate is not the strategy. The structure is. When the structure improves, everything across the board improves. Your cash flow, liquidity, flexibility, all improves, and financial stress, it drops dramatically. If this is starting to sound familiar to you, if your household earns good money but still feels tight every single month, comment cash flow below. I love to read the comments, and it helps me see what people are struggling with the most. And you might be surprised how many families are dealing with the exact same situation that you are right now, especially in places like Vancouver and the Fraser Valley, where housing costs have gone on a fucking tear. They're astronomically high. Now, let's recap quickly before we go any further. When high income families feel financially stuck, it usually comes down to three things. We have the fixed cost creep, trapped equity, and the paycheck trap. Once you see those three things clearly, you can start changing them, because when income is structured properly, that same $180,000 household can feel completely different. Not because they earn more, but because their money, it moves intentionally. They create margin and they unlock liquidity. They increase flexibility. And instead of their income feeding all of their monthly obligations, their income, it starts building options. This, my friends, is the moment the game shifts, because financially successful families, they don't just earn well, they design their finances intentionally. They make their money work for them. They make their cash flow strategic. And they sure as shit stop treating income like survival. They start treating it like a tool. If you want help actually looking at your own situation, pulling the curtains back and seeing what optimized structure could look like for you, there's a link below where you can book a 100% free, no strings attached call with myself. And I'll walk you through your specific numbers. I'll look at your mortgage and I'll show you what optimized actually looks like for your household. Because the truth is very simple. You don't have a mortgage problem, you have a strategy problem. And once strategy changes, like I said before, everything else gets easier. Stop chasing the rate, because the lowest rates is not what's going to win here today. When you're done with this video, check out last week's video where I break down why paying off your mortgage is a big mistake. I'll see you there.